All right, what's going on, guys? So it's Dan from Stockability. I wanted to make a video end of the week to talk about this market sell-off, to talk about where I think the market's going, some concepts of why the market sold off, then talk about some analysis from my point of view, or rather my perspective on the market. So that being said, let's get started on this video here. If you haven't liked and subscribed, make sure to like and subscribe to our YouTube channel. I'm going to talk about a few things today. You can also get additional videos that we make during the trading week. So let me start talking about a few things here. First and foremost, the actual market sell-off. So first and foremost, I think this is overdue, right? So if we look at the markets from certain situations, I think this is long overdue. So the question always becomes, do I think there's room to go lower? Yeah, I do. I definitely think these markets are going to reset a little bit more. I think what you're going to see here heading forward is a new trading range. So this whole concept of buying the dip and stocks are only going higher, this whole concept's been around for the past 8-9 months, since basically COVID last year, I think, is over. Okay, so which is going to make me transition to kind of market analysis. So one of the things I've seen in teaching or coaching students, and you see it really everywhere on the internet today, is a lot of people use technical indicators. They have no idea how those technical indicators work. They don't really do any deep dive into anything other than technical indicators. Okay, so you guys have to understand that there are market fundamentals that actually matter, right? That all these corporations that are out there are essentially, the amount of debt that they issue, how they issue that debt is really subject to rate changes and to the what's the term I'm looking for, the credit markets, and the credit markets aren't looking that great. So a lot of people only take one approach to the markets and say, hey, look, I'm going to buy a stock because a technical indicator told me to buy it, with no regard to what credit markets are saying or what macro markets are looking at. Okay, and you have to understand this from this perspective. And again, some people refuse to see this. And this is where you get lucky in investing and trading, and where you get actually good to what I would consider professional level. If you go to any massive hedge fund, mutual fund, anybody that's, and again, I'm going to leave financial advisors out of this, but any larger, sophisticated financial firm, right? Nobody's sitting there looking at technical indicators to make buying and selling decisions where they're putting hundreds of millions of dollars to work in companies, right? That's not happening at all, period. So why would you, as a retail investor, or trading small accounts, look at those to make decisions? It's beyond me. So that being said, I'm going to take you into kind of show you a way you can look at markets to determine, from somewhat of a technical perspective, what things should do. So let's talk about Tesla. Okay, so a few weeks ago, I made a video here on YouTube talking about how I thought this was going to break down and trade lower. Obviously, it's traded lower. It's been a pretty nice move on this, but there's things from price action trading. I'm going to talk about the VIX in a second that I can teach you in this short little video that'll help you. Okay, so, and again, don't think you can just watch this video, you can take out and start applying this. There's a lot more that goes into this. Okay, so if you look at this price reaction here, so these are major price support levels on Tesla. Okay, so it's no secret, anybody that manages serious money or trades in markets will tell you price levels matter in markets. Okay, so I have a naked price chart here. I don't have all these indicators. I don't have moving averages. We have price charts on here, right? So price action, right? And if you research, you can go and take a look at like Druckenmiller. Look at a lot of these hedge fund legends who use price action and see what their comments are about price action. Okay, the fact that we got here yesterday and price has not really had any bids come through tells you a lot, right? This is data. All this information right in front of you is data, but you have to learn how to read that data to make an investment decision. Okay, so I'm teaching you how to do this. The lack of reaction tells you there's no bids there. Okay, so the question becomes, well, should I bet against this and short this? Okay, my answer is always no. I'm not going to go into detail why in this video, but I wouldn't bet against it because it's already down significantly, in addition to some other reasons as well. Okay, so when I look at this, I can already tell there's no willing buyers here. I don't need to look at level 2, right? And again, to determine buying and selling. And a lot of you out there that are new to trading, or you've been to YouTube channels, let me just save you the hassle on this. Okay, so all these people on YouTube and TikTok and social media that are sitting there telling you to watch level 2 as if you're going to be able to read this data on here, there's zero period, nothing you're going to read on this. The only way level 2 matters, okay, is if you're trading stocks that are sub $5. Right? Low flow stocks where you can actually see order flow, you can read this. Everything here is pointless. Anybody that tells you otherwise is lying to you, right? It doesn't matter. Back in 99, 2000, 2001, when the market structure was different, when it traded in quarter points, not in fraction of pennies, level 2 mattered. It does not matter, period, anymore. In fact, if I could take it off the trading platforms for our students, I would. So the second thing is, when you get to these levels, does time and sales matter? Okay, yes and no. Okay, and there's a lot of bad information on this. I don't want to go into it too much. When you go into these particular levels, right, looking for larger blocks matters. Okay, and I know there's this kind of new thing in the markets where people are like, oh, block orders are detected, or there's like sweeps. Okay, that's just one piece of the puzzle. Okay, and this goes back to general investing and trading in markets. Is a lot of people just want to look at one piece of data and say, okay, this is my reason to buy or sell. You have to look at it from multiple perspectives. Okay, so the fact that you're not getting bid off this or not getting a strong reaction is tough, right? I don't like that, the lack of it, right? And again, if you guys ask questions like, well, define that, I can't do it in a short YouTube video. We have to get serious about education and look at different routes to learning, right? I'm just giving you a little bit of insight to hopefully start to get your mind to start thinking, hey, how do I look at it from different perspectives? Okay, so the lack of the beta there concerns me. Additionally, let me go and talk about the VIX. Okay, so when I'm looking at markets, when I look at the VIX here, this thing's not really doing much today. It's just it's stagnant. You're not getting really much of anything coming through on this at all. Okay, so even if we go and take a look at the actual ETF on this, right, this thing is just, it's not doing much, right? So the market's not really pricing in fear. I think that the market is still complacent. Okay, the market's been getting hammered this week, and this thing's not moving. Okay, so typically the concept is, well, if it's not moving, maybe the panic's over. Okay, so that's another perspective I want to take on it. If we look at it from a different angle, again, if you can see what I'm doing here, I'm looking at different data points to determine how do I develop an investing thesis of where I think markets are going. Okay, so when I look at the S&P 500, and I want you guys all that are new to trading, or maybe you've done this, and I'm going to give you a short insight to this. When you look at the large time frames of markets, right, and you see this, do you really think this is going to progress higher? You need momentum in markets. You need new buyers to get price to go higher. There's market structure that occurs in the back end. The technical indicators aren't going to tell you. And this is one thing I try to really instill into our students is look at the large time frame. Right? If you really believe this is going to continue a massive price move higher without pulling back, you need more education on price action and price charts. Okay? You have to look at it from those perspectives. Okay? This doesn't apply to everything. You can't look at what I'm saying to you now and take it to, like, I don't know, an FSR, for example. Okay, so this is a relatively new issued company. You can't take it from this perspective and say, oh, well, it's at all-time highs. It's all in context, right? And that's part of investing at what I would consider a proper level. Okay, so that's kind of a short insight to this. As far as the rest of the markets go, to summarize some of this is I do think we're headed lower in a lot of these things. Where we're going, I don't know, right? And I'm not one to call price targets on markets. People on TV and economists get paid to do that. I just take it price level to price level. I do think we're headed lower. So what that means for me as a trader when I'm looking at markets, if we get price bounces in equities, I'm not going to think, hey, this is the long. I'm going to buy and hold this for 3 or 4 months. Every time we get a price bounce, I'm looking to short. And any bounce play I'm taking, in fact, I'm looking at a bounce here. I haven't taken it yet, but any like reactionary level I'm looking at taking a long on, I probably won't hang in those longs for too long. Okay, so again, even Netflix is a good example of this. It's at prime levels and it's just slicing through them. So I do think this market's headed lower. I would be chasing longs here. If I was taking long positions, they would be very short term, maybe 1-2 hours, maybe max of 1 day. So that's my short analysis on this. If you guys have questions, again, I know it's a lot. And I know people that come to our channel or people investing were like, well, I want a simple solution to this. Look, I wish there was a simple solution to it. If there was a simple solution, everybody in the world would have a $15 billion hedge fund, and we'd all be hedge fund managers. The problem is there's not a simple solution. It takes in-depth analysis. It takes work to understand how markets actually work. So if you're interested, we have some beginner courses. You can head over to our website. Like and subscribe to the YouTube channel. I try to give out some tidbits here and there. The more you engage in the comment section, if you attend one of our webinars, we can start to show you different perspectives of markets and how to start to look at it from a different angle versus just technical indicators or you following trading signals or guessing, or even worse, guessing whether stocks are going higher or lower. So That being said, thanks for watching. We'll see you guys in the next video. Have a good weekend, and we'll see you next week.